Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're looking at some intriguing developments in Canada's economic landscape, specifically focusing on the job market's impact on potential interest rate changes. In December, Canada's job market saw a significant surge, with total employment rising by 91,000 jobs, according to Statistics Canada. This growth was predominantly in full-time positions, which increased by 57,500, while part-time jobs also saw a boost of 33,500. This marks a noteworthy shift, as Canada's employment rate, the percentage of the population over 15 that is employed, rose by 0.2%, the first increase since January 2023. Meanwhile, the unemployment rate dropped by 0.1% to 6.7% in December. The youth employment rate also experienced a rise, going up by 0.5% to 14.4% as more young Canadians entered the workforce. Significant job growth was noted in sectors such as educational services, transportation and warehousing, healthcare and finance, insurance, real estate, and rental and leasing businesses, each adding substantial numbers to the workforce. James Orlando from TD Economics commented on this positive trend, stating that despite the negative discourse surrounding Canada's economy, the country continues to add jobs, particularly full-time positions in cyclically sensitive industries. According to Statistics Canada, total hours worked increased by 2.1% year over year and rose by 0.5% in December. Additionally, average hourly wages saw a notable rise of 3.8%, or $1.32, reaching $35.77. In parallel news, the United States also experienced strong employment growth, adding 256,000 jobs in December, surpassing market forecasts of 160,000. This development has influenced economic indicators such as U.S. Treasuries and 10-year bond yields, which are crucial in determining fixed mortgage rate pricing. The Government of Canada's 5-year bond yield increased by over 11 basis points to 3.15%. Bruno Valco, Vice President of Sales at RMG, highlighted that good economic news often translates to unfavorable conditions for mortgage interest rates. He noted that the U.S. 10-year Treasury yield also rose by 10 basis points to a new one-year high, which could exert upward pressure on fixed mortgage rates in both the United States and Canada. These robust job numbers have led economists to reconsider the likelihood of a rate cut by the Bank of Canada this January. Previously, all of the Big Six banks had anticipated at least a quarter-point rate cut this quarter, with some expecting a 50 basis point reduction during the Bank of Canada's meetings in January and March. However, today's job report casts doubt on this expectation. James Orlando suggested that the Bank of Canada might now have sufficient data, especially after the U.S. presidential inauguration on January 20th, to decide whether a rate cut is necessary to bolster the economy. Douglas Porter from BMO also expressed that these job gains introduce significant uncertainty about whether the Bank of Canada will proceed with a January rate cut. He mentioned other factors, such as the potential threat of tariffs in 2025, a weak Canadian dollar, and the Federal Reserve pausing its rate changes, which could also influence the Bank of Canada's decision. In today's segment, we're diving into a fascinating report that predicts a significant shift in Canada's condominium market. According to a recent analysis by the national realty firm Zoocasa, the average price of a condo in Canada could reach a staggering $1 million within the next decade. This anticipated growth is primarily driven by the country's largest urban centers, Toronto and Vancouver, as highlighted in a report from the Calgary Herald. Zoocasa's extensive analysis of historical price trends suggests that Vancouver might cross the $1 million threshold within the next 6 years, closely followed by Toronto in about 7 years. Interestingly, other cities are also expected to reach similar price milestones, potentially on even shorter timelines. For instance, Halifax, which has been experiencing significant price growth, is forecasted to hit the $1 million mark within 7 years, despite its current average condo price being $462,650 as of 2024. In comparison, Toronto's average condo price stood at $671,980 in December 2024. Meanwhile, Calgary, known as one of Canada's more affordable metropolitan markets, shows a longer trajectory. The report predicts that Calgary's average condo price, currently about $342,000, will not reach the $1 million mark until 2040. Other cities included in the forecast are Hamilton, expected to reach this milestone by 2033, Victoria by 2035, and Ottawa by 2036. In stark contrast, cities like Winnipeg and Regina face much longer timelines. Winnipeg is projected to hit the $1 million mark by 2081, while Regina might not reach it until 2085. These differences highlight the varied pace of real estate price growth across the country. As the cost of homeownership continues to rise, affordability is becoming a pressing issue. Many prospective buyers, particularly young families and first-time home buyers, are being priced out of the market. A report from the New Hampshire Union Leader points out that this trend is not unique to Canada. Similar patterns are emerging in other regions, such as New Hampshire, where the median household income is increasingly insufficient to afford a median-priced condo. In 2019, the median income was 177% of the cost of a condo, but now it covers only 73%, making homeownership a growing challenge. The rising prices raise questions about sustainability and whether a market correction is on the horizon. It's a situation that warrants close attention, as the implications for buyers and the broader economy could be significant. Now, let's switch gears and take a look at the luxury real estate market in Ontario. Recently, a stunning home in Mississauga's prestigious Lorne Park neighborhood has been listed for just over $4 million. This property offers a blend of luxury living with the feel of a five-star resort right in the comfort of your home. Situated at 1,282 Catchacoma Court, this 7,300 square foot custom home features 4 bedrooms and 5 bathrooms, making it perfect for families or those who love to entertain. As you enter the foyer, you're greeted by exposed brick detailing and a sleek glass railing that leads to the second story, setting the tone for the rest of this exquisite property. The family room is both spacious and cozy, boasting a fireplace and expansive patio doors that offer views of the serene surroundings. The kitchen is a chef's dream, with a massive island, plenty of cabinetry, and a snug breakfast nook, all enhanced by rich brick walls. The owner's suite is nothing short of spectacular, featuring soaring ceilings, exposed beams and bricks, a luxury boutique-inspired walk-in closet, and a spa-style ensuite. Downstairs, the home offers a second living area with some truly exciting amenities. There's a full bar with ample shelf space for liquors and spirits, as well as a cigar sitting area. For wine enthusiasts, a climate-controlled wine cellar with endless storage space awaits. But perhaps the most impressive feature is the massive indoor pool, accompanied by a personal gym and sauna, making this home a true sanctuary. The outdoor space is equally impressive, featuring a massive private deck with glass railings and an outdoor kitchen, perfect for entertaining guests during the warmer months. All these luxury amenities come at a hefty price, as the home is currently listed for $4,195,000. It's a significant investment, but for those seeking a luxurious lifestyle, this property could be a dream come true. As we see more properties like this hitting the market, it's clear that the demand for luxury homes with resort-style amenities is on the rise. Whether you are in the market for such a home or simply enjoy seeing what is available, it's fascinating to observe how the luxury real estate market continues to evolve. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder: Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.